Good afternoon. Welcome to the market close. Welcome to the weekend. What a week it is done. Let's uh let's talk about it. We'll talk about the markets. We'll ring a little bell here in a little bit. Well, when I say a little bit, I'm talking 15 minutes. So always good to be here on a Friday afternoon as we get ready. And this we're two weeks away. 2 weeks from today is our open to close. So we're looking at a big 7 hour stream. It's going to be fantastic. I can't wait. So 2 weeks from today, mark it on your calendars because, and of course, if you can't be there for the live, um, you got nothing to do the following Saturday. You got a 7 hour stream that you can watch. I imagine a few of you will probably watch it like at time and a half just to, turn it into like a 4 hour stream. But that's cool. That's cool. Anyway, well, we got ourselves, as the sign behind me shows, we got a green day. We've had 2 green days in a row pretty much since when the CPI for the US dropped yesterday. It was good news. It was really good news. Inflation has shown a sign that it's going down, which optimistically means there could possibly be two rate cuts before year's end down south of the border. Canada loved this. Canada reacted, and we've had a couple solid green days. US didn't like it as much, believe it or not. Believe it or not. Good news, but we're still gonna go into the red, and they had a pretty big sell-off yesterday. So we'll talk a little more about that, of course, on the other side of the bell. For now, though, what the banana bread is going on with these markets? Let's take a look. Let's bring up the good old market here, and as you guys can see, the TSX looking good right now. It's up 0.72%. The S&P 500 also in the green, up 0.69%. NASDAQ up a full 1%. Gold not doing as well. It's down a little bit, 0.11 down. Silver, though, oh boy, silver's down a full 2.14%. Bitcoin kind of flat, but it is up a little bit. It's up 0.71%. But right now, as you guys can see on the chart over to the side, it's struggling to keep that. It's sort of plunging back down through these moving averages. So what can we say? For now, though, let's take a look at the heat map for the TSX. As you can see, we got a lot of green in here. We got some really good-looking, healthy ones. The banks are all looking to have done really well. BMO 1.27% up, so not too shabby. I know Vic likes to go for the BMO. Scotiabank is up. Manulife Financial's up. Sun Life, it's looking pretty good. Over here, another strong one, Constellation Software. They are up a full 1.6%. Both railroads on the positive side, so not too shabby. TELUS is up a full 1.05%, and Bell is up 0.57. Now here's Rogers. Are they up or are they in the green? I honestly don't know because red's their color, but I think they're down. Let's take a look. Yeah, they are down 2.78%. So Rogers not having a good day at all. But everybody else is, but just not Rogers. Alimentation Couche-Tard doing good, up 0.93%. Enbridge is up. It's a good day. It's a good day on the Canadian market, and even the ETFs are looking the same. Good old VFV is up almost 1%, 0.94. And of course, VEQT and XEQT really, really close. XEQT is up a tiny bit more, 0.86% to the 0.83%. Okay, let's take a look at the good old USA. And we've got Apple up. We got NVIDIA up. Now, Microsoft and Google down a wee bit, but look at Meta. Meta's not having a great day. Down 2.66%. But over here is Tesla. And Tesla is starting to make a bit of a recount because they had a little bit of a correction coming back here, and they are making a little bit of a little bit of a bounce back. But this correction, absolutely normal. When you explode a stock like this, you're almost guaranteed to get a correction at some point. It looks like they got it. It looks like they got it. So not too shabby. All right. Yeah, that's the US. And of course, over in the world of crypto, once again, not a bad looking chart. We got some green. We got Bitcoin up a little bit, Ethereum up a little bit. Solana is up 2.11%. So that's not too shabby. And those XRP fans out there, oh, you guys are happy, up 4.41%. There are tens of thousands of cryptos. Quite literally, there's more than 14,000. And there's so many coins I've never heard of. Let's find one. Here's one. I've never heard of this. Brain Trust. Whose brain am I trusting? I don't know. I don't know this coin. It's not doing well. It's plunging. I have no idea what this coin's about, what it does. It's one of them random coins I've never heard before, and it's not going in my portfolio. But hey, if any of you guys invest in Brain Trust or know what Brain Trust is, let me know. Let me know in the comments. I would be interested to know. Now, of course, I wonder if Brett and his cat work here. So we'll leave that be for now. But yeah, crypto looking good, looking strong. Okay, there are a banana bread boatload of comments over here. Let's hit up the comments. Let's see what you guys are saying. And our first commenter of the day is Jonathan. Am I late? Heck no, it's my last vacation day. Well, ooh, love vacation days, but that last vacation day, that's when you start to get that little pit in your stomach, that dread that says, oh, I got to go back to work after the weekend. So try though to enjoy your final weekend before returning to the slog that is that's your job. Or maybe you love your job. That could be. Open up the weekend. Yeah, the weekend's here. A summer weekend. Does anybody have any fun stuff you got planned for the weekend? Like, are any of you like campers, or do you do the outdoor thing? Definitely be interesting to know. So could be interesting. Prairie says, good afternoon, Candace and chat. Looking forward to this. Another fantastic market close live stream. Yes, absolutely. Now you may hear a vacuum. Our cleaning lady is a little late today. So she's just finishing up upstairs. That won't be here for long, if you can hear it. The mic itself is not pointed. It's pointed towards me. So hopefully it's filtering some of that background noise out. But it will be gone momentarily. Stan says, happy Friday, all. And Marco says, Green Day, let's go. Absolutely. Vic says, brushed the thumbs up on the way in. Yeah, absolutely. If you have not hit that like button yet, now's the time. Now's the time. Just slam on that button. Turn it blue. All right. And Mario says, good afternoon. And let's see. Vic has a random fact. Met a farmer north of Brandon, Manitoba in Alberta today. Okay. Very cool. Very cool. I'm trying to picture the maps and thinking, okay, how does that work? But I think I got it. Mario says, good afternoon. Marco says, Rogers is up. Well, not according to the map, unless the map is wrong. But heck, you know what? Let's go back to the map. And over here is Rogers. And I'll just refresh the whole map just in case. Oh, you know what? That shouldn't be, oops. That should not be there on my map. Come on. There we go. All right. Rogers right here. Yeah. It's down 2.78% according to this. So yeah. It's down. I'm sorry. All right. Let's get back to this. Cece says, reading up on the Constellation software founder is inspirational. I have not read that story. So now I'm kind of curious. I may have to check that out. Vic is saying, CSU, next stop, $5,000. And Mario is saying, I'm going to pass on Brain Trust. Me too. Um, yeah, I don't want anything to do with this brain trust. Mary says, "Good afternoon, everyone." And of course, Mary is the unofficial like button uh, avocado or not avocado. I was gonna say officio. Yeah, not an avocado. She's not an avocado, but anyway, hit that like button, guys. Mohammed says, I'm not bearish anymore. Bought 80 shares of Tesla and will double them if the stock dips more. Yeah, absolutely. I mean, Tesla's one of these stocks that they always find a way to bounce back. They always do. It doesn't matter how far out you've counted them, they're finding a way to come back. It's just the way that Tesla has always been. All right. Kevin and Kaz says, good afternoon, gang. Green, but not quite green enough for my swings. Yes. And you know, this happens. Like, if you're doing swings, so many times you'll have your exit point and it will get it'll get a penny. It'll get like within 1 penny to your exit point, but it just doesn't hit that point. And you got to be like, oh, sometimes it goes that way. Jordan is in the house with an afternoon. Candace, or is that Canada Ace? Funny fact. One time I had to sign my name on some document, and I don't know what I was thinking, but when I looked down, I just spelled I just wrote in Canada for some reason. So funny. Mario says, I sold some HDIF and picked up UMAX. So yeah, so UMAX, guys, is let's actually pull this up here. We'll bring this over. UMAX is a brand new ETF. So let's go. We'll bring up our Google UMAX ETF. All right, let's bring it up. We'll get to the page. Here we go. Hamilton UMAX. There we go. So here we go. That's a Hamilton Utilities Yield Maximizer ETF. Ticker UMAX, and it's projected to have a yield of 14.55%. And if you look at it, it's got exposure to Canada's largest utilities, pipelines, telecoms, and railways. So I love the fact there's railways in it. So that to me is huge. I don't know why. For some reason, the second I heard UMAX, I thought tech immediately. But I'm thinking of another one. But yeah, this one is definitely another interest. Hamilton makes some really good ETFs. I really should reach out to them and say, hey, I talk a lot about your ETFs. You guys should sponsor me. That's what I should do. But yeah, it's another one. I always say, if you're looking at an ETF, always go and visit their homepage because you can get a lot of information here. Like, for example, let's see here. If you want to look at, for example, like their sector allocation, you can also look at their holdings. Like, look at these. We got some big hitters in here. We've got Waste Connections, Pembina. I know the B is silent, so I'm always trying to not use that B. Enbridge, Fortis, Hydro One, Mira, BCE, TC Energy, Brookfield Infrastructure, TELUS, and there's the railroads right there. Oh, and then there's Rogers. Rogers is there too, but that's okay. We can forgive them for Rogers. And I remember somebody the other day asked me, how do I find out how often they rebalance? Well, when you go to their page, normally you will find that in here. So in this case here, they do a semi-annual rebalance. So basically every 6 months, they're going to come in and look at this and look at the performance and see what adjustments need to be made. So that's kind of their general gist of it. Most of them, I think most are probably semi-annual, but something worth checking out. Okay, let's get back to the chat. And before we do anything else, there's something really, really, really important that I got to do. And it is, it's the bell. Here we go. All right. The bell has wrought or rung. It's all that fun stuff. Jonathan says, Mary's not afraid of the dark, and that's where she'll be waiting for you if you forget to hit the like button. It's like, yeah, Larry, Mary's in your closet just waiting to strike because you didn't hit the like button. Oh dear. I don't think Mary would hurt you for not hitting the like button. She'd probably just give you a frown, a Mary frown. So you don't want the Mary frown. Um, Mary says, I love lupine and atopicus. And then Al's in the house with a hola. And we got a dang it coming from Jordan. Sammer saying, hi guys. Jordan is, I think he's sorry for the dang it, maybe. Bell. Yes, we got it. We got it. We hit that bell hard. We hit that bell hard. Let's see. Hamilton AUM going crazy. AUM. Let's take a look and see if we can find. Oops, give me a second. I have to actually, let's bring it up here. AUM, which I don't even know which one AUM is. All right, we'll go over here. If it's going crazy, we should be able to see it on the charts. AUM. Well, you're talking assets under management, are you? Because AUM is like basically gold. AU is like the atomic symbol for gold. So AU mega metals. You brought them up. Let's look. It's a penny stock. Yeah, it's kind of sketchy, but let's see here. Yeah, it's brand new from the looks of it. Looks like it just started in June. So I don't know about that, but yeah, we'll leave that one alone. All right, let's get back in here. A good day for the markets today. Yeah, absolutely. It was definitely a pretty good day on the markets. We had a nice green day. Not too shabby. Now, 9 is saying that UMAX is my worst performer. Luckily, I only have $150 in it. Wow. Well, how is UMAX performing? We didn't actually look at that. We just looked at the main page. All right, let's pull this up and take a look. All right, we'll go to the 1 year for now. So yeah, it's been kind of on a bit of a downtrend over the last little bit. I do see a little bit of hope there, but this is going to be one of those ones that until some of the underlying assets start to move into well, some of them have. I mean, the railroads have been doing pretty good. Like if you look at, I always go to CNR. So let's go to CP this time for a change. If you look at CP and you look at how they've been doing over the last year, okay, they've also kind of had a little bit of a bump down. Maybe I should have went to CNR. Yeah, let's go to CNR. Let's just do it. I should have just stuck with the favorite. Let's take a look at that as well. All right, now. Yeah, CNR, it's not that different. I mean, you've still got that little bit of a bump going down as well. So, but for the most part, I mean, I've been happy. I'm happy with CNR. I'm happy with the railroad. So I think it's going to be a similar situation with this ETF. So it's kind of one of those ones. It's not one of the exciting ones. But once we do start to get a bit more recovery in the market, it will help this one. So hopefully it can get you back into the green. If you're not in the green already. I have a feeling, though, from the sounds of that, you may not be. Good Vibes is in the house saying hi. Right, and Ambas says hi, all with cuts. Tech 30%, health 20%, consumer discretionary CD 20%, financials 15%. Whoops, things moved a bit while I was reading it. Let's see here. Utilities 15% as Chat G. Could REIT and BTCY fall in CD? If XEG be beneficial, would you mix allocation with 15% utilities? Holy banana bread. That's a mouthful. That is a mouthful for sure. So yeah, now with cuts. So right now, tech is being powered by the AI boom. So rate cuts will still be good for them, but right now they're holding their own. They're holding their own for sure. Out of this group in here, Your utilities are definitely utilities and REITs, I think, will be the bigger winners with the initial rate cuts. Now, an interesting thing, the National Bank actually came out today and said that if we don't start getting a bit more aggressive with the rate cuts in Canada, we could be looking at a 7% unemployment rate. So that could be very interesting as well. Just something to keep under, sort of under your view for a bit here. But all right. See, that's what happens. I start to fumble words when I'm reading ahead as I'm trying to answer behind. I should just stop doing that. Focus on the question. Focus on the question. But yeah, going back to this one, AmVas, REITs, I think, and utilities, they'll be the big winners with it. But I mean, the rate cuts should help a lot of companies going across the board. Anybody who's carrying a lot of debt is going to benefit from these rate cuts. Now, BTCY, that's another exception. BTCY rate cuts aren't going to really do anything unless there's any impact upon the price of Bitcoin, because that'll be what controls what happens with BTCY. And keep in mind too, because of that is covered calls, your upside potential is limited a little bit. So if Bitcoin really, so in the past, after the halving, about 5 months, we've had these big explosions in the price of Bitcoin. So when that happens, BTCY, it's going to go up. It's going to be impressive, but it won't be as impressive as a non-covered call version. That's something just to keep in mind. But I also look at it this way: with the volatility in Bitcoin, and once Bitcoin is after it's finished its little explosions and it's sort of moving sideways for long periods of time, BTCY is great because you're getting all of that. You're getting that distribution from it as well. All right. Enid is in the house with a hello, everyone. Yeah, assets under management. Exactly. Duh. Al says, I don't understand these option ETFs. They have like a 14% yield, but their returns after a year are single digits or are very low, like ZWU. Why are these type of ETFs so good? Doesn't the underlying assets just eventually erode away? Great question. I love that question. So here's the thing with a lot of these high dividends. So I call them income stocks. So you're not really in the game at that point for your total return. Now, sometimes situationally, they can do great, and you can have some great total returns. I'll give you an example. Let me pull this up here, for example. Let's see, TSLY. All right. Actually, sorry. Let's use the right one. YTSL. There we go. This is the one I'm looking for. All right. So here's an example for you. So this is your Tesla yield shares right now. So when you look at it, you do have, okay. It's not giving us a distribution. That sucks. I wish it had a distribution here on here, but let's go to the 1 year. So it's generally it's heading down, but Tesla was heading down. I actually picked the absolute worst one I could have picked. But you can see here's where Tesla exploded. So it's moving back up with Tesla. Actually, you know what? Here, let me go with something completely different. I'm going to go with QQCC. That's a much better one because right now, the NASDAQ. So the NASDAQ has exploded in the last year. So this one here, and this one we actually do have a number. So we have a 10. So this is a 10.505. Now, when you look at the last year, you can see it's doing really well. So when you're looking at this one, you're getting, your dividend, you're getting your 10% here, so 10.5, and you're getting all of this growth right here. So when we look at this one, and this is why I say they can be situational if you're looking at it from a total return perspective. But when you look at it this way, you have, so let's just say from down here, if you had bought in down here at $10 or, $10.80 up to $12.32, so you're getting that growth right there. You're also then getting the dividend. So all of a sudden, you've got a total return situation. Now, you don't always get that. So let's choose a different one now. Let's go kind of in the opposite direction. We'll go with HYLD. So this here's the Hamilton Enhanced. All right. Now, when we look at this one, now right now it should be doing better because the markets have been recovering. So when we look at the last year, you can see this is fantastic. You're doing well on it. Situational though, remember I said that? So let's go back. When we go back, we can see this is where the problem is. This was formed. So this ETF was formed around the time when we were in a bear market, or sorry, a bull market at that point in time. And it was formed just before the bull market died. And then we went into this big old bear market right away. So all of a sudden, if you bought when this opened up at 1603, bang, bang, we're down. Look at that. And, we moved sideways for a long time, and now we're back into recovery. But you'll notice we're only sitting at 1405. So we haven't gotten back to where they started. So if you bought at the beginning and you're still waiting to be green, you're going to be waiting a long time. Because yes, you are right. You have this erosion of capital. And that's what's happened here. We're down to this. Now, you can argue, and some people will argue, if you talk to anybody who is like a pure covered call investor, what they'll argue is they'll say, well, look, no, you haven't really lost because, you've been getting that crazy dividend all along there. So, and it's true. And when you actually go in and start looking at your total return, well, yeah, you've got more money there than, and I haven't actually done the math on this one particular. But yeah, you have that possibility, and if you're reinvesting, and this is that other thing. So if you've been reinvesting that dividend all the time, so you've set it up like a drip, yeah, this is going to look a lot better. You'll probably be a lot closer. I can't say without doing the math if you would actually be at the top or not. But heck, let's do it. You guys, let's do the math. Let's do the math. Why not? All right. I need let's see here. Oh, actually, I just need this one. Views. Give me a second here. We'll go to sheet. All right. All right, we'll go over here. Oh, and I did want to address one thing here. So I had somebody complain about what we did here. And they made a legitimate point because this one here, YNVD hadn't actually been around for a full year. So because of that, and I pulled the 1 year data on this. Yeah, it is a little bit closer. So that would be a little bit lower if I had matched it to the exact date of this one. But like I said, this was just something off the cuff. So I'm not too concerned. All right, what we're going to do right now is we're going to look at HYLD. All right, so we got HYLD, and they're currently at 1405. I'm just going to put it in the 3 year. It doesn't matter right now. I just need to get a little bit, that 1405 belongs right there. All right, so they're currently $14.05, and we'll go back right to the beginning. So we're going to say we bought day one, 1613. All right, so we look at that, 1613. So basically what that means is we bring this down. So when you look at it, yeah, it shows that we are out $12.90. However, we got some dividends that we have to look at. So what we're going to do here to do this the quick and easy way is we're going to go to Yahoo Finance. Bang, we'll bring it up. All right, we want HYLD. There we go, bang. We're going to go to historical data. I'm looking for dividends only. I'm just going to choose the 5 year. We don't have 5 years worth of data, but whoops, I have to hit apply first, then download. All right, so now, give me 1 second here. I just have to pull up the sheet. All right. All right, now here is our sheet that has all of the dividends since they began. So there's the first one back in 2022. All right, so I'm just going to very quickly just copy these. Perfect. All right, I have those now on my clipboard. Let me pull back let's pull this back here. All right, and I'm just gonna delete. I'm just gonna drop them all here in this column. There we go, all 28 dividends. So $3. We'll put this in here. So we received $3.70, almost 71 cents. All right, that's fine. So when we pull that down, you'll actually see if you bought in at the very beginning, yeah, you have made a profit. You're up 10.08% over the life of it. Now that's if you bought in at the very beginning. So if let's take a look here. Oh, let's see here. Bang, right here. So, I mean, if you bought in anywhere along this part, you're definitely doing a lot better. So that all adds up. And it's kind of one of the things that what I say situational, like if, for example, you do, if you buy when you see the market's doing well, that asset is going to go up. But here's the thing. It is limited. Because it's covered calls, it caps off the top potential because of the way options work. Now, that means that if the market, if its underlying assets were to go and do something crazy, like, here's a good example. We'll use the whiteboard. We'll just use blue. So let's say, for example, if this is what the assets are doing, I'm just going to draw this as like an average line. Don't worry, I'm not going to put all the jabs. So because the covered call, and we'll put that in, we'll go with purple. So what the covered call will be doing is it's still going up, but its potential is capped. So it's only going up that much, whereas all of the underlying assets are going up that much. That's kind of that whole cap potential. And that has to do with the different strike prices and options being called. Now, part of the income that you're receiving is also going to be is the premiums. So what is kind of nice is if we'll just pull this down here. Let's do that same thing. If it's kind of going like this, I probably should have just put it on the free draw. But if it's having a pretty flat market, well, one of the nice things is that with this here, with a covered call, well, you're going to have a little bit of those premiums. You're still going to kind of follow the same thing. But in this case, you're actually going to be a little bit, you're going to be a little bit higher. So you're going to do okay. So that it's not too shabby. But the problem is, and this is the same thing, if the market goes down, let's go. All right. And we'll come in and we'll do our thing. So if your market's going down, we'll just use a straight line. I like it. In this case, you're going down too, but you're still making some money from the premiums. So you're not quite going down as much as the other market, but you'll see that you're losing. So, you're still, the premiums are sort of saving yourselves a little bit, but overall you're still going down. And then this will, of course, over time, when this starts to move back up. So, all right, let's do one more. All right. So, all right. Market went down, market went flat, and market went up. We'll just go with this one here. So in this case, we'll bring in our thing. So yeah, you're going to be coming down slightly, slightly above. Then the market skewed. So you're not, that's kind of showing you the whole scenario. So, you can make, and you're still getting all your income. That's the nice thing. So a lot of times what's going on, pull this off for the moment. So a lot of times what's going on is that if you have a situation, so let's say, for example, you're looking at a retirement portfolio, your goal is just to have income coming out of your TFSA tax-free. So you're not super concerned about how much things are growing inside of the TFSA. You're just concerned about that money coming out, that you have enough income. So in a case like that, these become very, very popular. And even though they work in this way and you get some capped limitations and things like that, they're not too shabby. So for example, you may, in a situation where the market's going down, So with HYLD, whoops, let's bring this back. I guess I still need it. And I'm going to bring in the text. So when they started roughly 14% dividend. The markets went down. They were struggling. They went down to, I think they got down as far as 12. And then as the market started recovering, they went back to 13, 14. And now they're like, what, 14.5 or something like that. Let's take a look. What are they at right now? And this is not the dividend yield. This is the actual dividend. So let me go back here. Key data. All right, so you can see. So then you can see this here. So when they, at one point, right now, 14.3, 14.3. But this is where they went down to 12. If we go back to the beginning, they started at 14, went down to 12. And then as the market started to get better, 12.1, 13, 14, 14.3. So not a bad way. I mean, it's a way to make some income that's coming in there. And this is why I say situational, because there are ETFs that are absolutely garbage, and they will come down. Now, and I've talked about this one a lot too, but when we look at RMAX, so here's the Hamilton one. This is a brand new one, and it's doing REITs. Now, what I like about this one is we'll just put the 3-month in here. So you can see it's doing well. It's up to 1688. And they started at basically $16. One of the reasons I like this is if you guys remember when we were looking at HYLD, they started it at the top of the market. They started it at the top. And of course it fell with the bear market. This one is a situation where they're actually starting it at the bottom of the market. And so this is going to go up. This is going to go up. No doubt about it. And, you know, the dividends are going to be fine once, you know, I don't think we have a yield yet from them. Have they declared? I don't know if they've even declared their first dividend yet or not. Let's take a look. No, we don't have it. We don't even have the declaration yet on their first dividend, but it's coming. Normally, when these start up, your first dividend doesn't usually come right away. It usually comes a couple of months after you've begun, and that's fine. That's just the way, you know, the way it works to get everything all set up. But this one here, we're starting at the bottom. So it's going to move up. Now, you could say, well, what about that capped potential? Yeah, that's there. You're going to have to deal with it. But here's the thing. And here is that thing. When you look at the growth that you're getting, when you look at the dividends that you're getting, and if you reinvest those dividends into it, it's, you know, you're going to be pretty darn close. But it's going to be it's going to be, I think, in my opinion, it is going to be a strong movement up. That's one of the reasons I'm excited about it. Okay. The tangent we go on to for a single question. I love it, though. I love it. That's why I can't wait. I can't wait to the all-day show, because then there's like, I don't care. I'll go on a tangent for an hour. Well, I probably won't go for an hour, but, you know, it's fun. All right. AMAX. Let's see. I'm down 11% for UMAX, but with the dividend included, close to breaking even. Okay, fair enough. Mario says, Mario bought the dip. Mario bought the dip. 9 says, yeah, QQCC, good CC ETF for total return when the NASDAQ is doing well. Exactly. And a lot of people, I mean, there's naysayers out there that are going to say that the AI bubble, it's going to pop. It's going to pop. But I'm not one of those naysayers. I have full confidence in the AI bubble. I think AI is going to do strong. I think there was an article as well this week about Kathy Wood saying the same thing. I take everything she says with a grain of salt, but I agree with her on that one for sure. Vineet's in the house with a hi all. Hello, Vineet. Hope your weekend is going fantastic. 9 says, I like using CC income to buy total return ETFs like VFV, XEQT, etc. But I have the income ready if I need it. Yeah, not too bad. Not too bad. All right. Al says, let's see, but 10.08 is a kind of low, isn't it? I mean, SCHG ETF was 50.11% return last year, and SCHG is 21.75%. year to date. I just don't get why people like options ETFs that much. It makes sense for retirees, but most people, yeah. I mean, it boils down to what, in some cases. Now, I'll give you an example. I usually will have a few in my portfolio because I really like having that income for me when I'm doing passive rebalancing. So, for example, oh, excuse me, small tickle. So when I'm doing passive rebalancing, I can use that and to sort of funnel things where I want to, and I like having that ability to do that. Now, eventually, eventually I'll have to convert this into like a retirement portfolio, and I'll be like, okay, cool, and I'll stack up a bit more on them at that point. But right now, I do tend, like, you take RMAX. So my goal with RMAX is I'm going to ride it up. Once it's up and it's just basically a regular covered call ETF and most of the recovery has happened, I'm probably going to move out of it at that point, because I like to be a little bit more situational, because anytime I can take an income ETF and use it as a total return ETF, I'm always happy. I'm always happy. All right. Paul says, funny thing is my short-term crypto is down an amount for BTC. That is the same as the amount Sol is up. Oh, wow. Yeah. Solana is doing really well. And I heard something as well about them having a deal with PayPal that is certainly helping them as well. Let's see. 9 says, option income is good in a TFSA to increase your income without increasing your income tax. That's the whole idea, right? Because once you've retired, the last thing you want to do is be creating a whole bunch of income that's taxed, that's counting as income, because that could affect your supports. For one, if your income is low enough, you can get the GIC, so the guaranteed income supplements, or the GIS. You can pick that up, and that's more money there, and you can live quite comfortably if you can keep that income down. That's also one of the reasons as well when it comes to your RRSP. Some people before retirement will actually burn it out. They'll do the RRSP meltdown to get that money out, make sure that their TFSA is totally maxed, because then they don't have to worry about whether there's going to be income coming out of that's going to lead to them losing benefits. And if you're in that situation, like maybe you're making too much for the GIS, but you could also get to a point where you have to start thinking about OAS clawback, which is another thing that you don't want to have happen. All right. Black Dog says, speaking of AI, have you looked at the Evolve ARTI ETF? Well, let's take a look at it right now. All right. ARTI. So here we go. It's the Evolve Artificial Intelligence Fund. I like it. I haven't looked at it yet, but I can tell you I already like it. And look at this. Yeah, look at this. It's that's not too shabby. That's not too shabby. I don't know if it has actually, let's go to the page for it. All right, Google. All right, All right, ARTI ETF. All right, there we go, right here. We will go to the Evolve page here in a moment. There we go. Ooh, cool. I like the graphics too. It's like they got me. They got me. Look at this. So, all right. So let's see what we got here. So they're holding 61 companies. All right, let's see here. Just taking a look here. Management fee, 60.60%. They just came out March 22nd, so they're pretty brand new. Now, I don't know if they have any intentions of doing a dividend on this. They may not. This may be a straight, well, here's a distributions page. So let's see here. As far as I know, I don't know if they plan to have a dividend on it. But once again, when you're looking at growth like this, you kind of don't need a dividend. You know, 'cause, I mean, you've gone from you've gone from like 9, you know, almost $10. So you've already gained more than $1 just in value right there. So that's not too shabby. And that's not a long period of time because, you know, this thing came out in March. So I think I like it. I think I like it. ARTI. I just, yeah, yeah. I am a big fan. Now I do hold, by the way, I do hold I actually hold in my US TFSA. I have a US AI ETF, but I'm kind of curious here. Let's actually go. Mm-mm-mm. All right. Let's see here. Number of holdings 61. All right. So they're saying that if there's any distribution, it would be annually, if any. So it's not really looking like there's going to be any anything in here. But here are their top holdings. We got Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia. Those are all almost 10%. They're up there. And then we've dropped down to like Broadcom, Advanced Micro Devices, Salesforce, Adobe. That's not bad. It's not bad. Now you could argue that Nvidia might, should probably have a better weight than I would say. I would say Apple, Microsoft, and Nvidia probably should be at the top, then Alphabet. But that's just kind of how I would look at it. That's how I would do it. All right. Oh, you know what? We didn't take our final look at the market. Let's do that. Let's do that while I got this up here. All right, final look at the market. Once again, the TSX finished well in the green, 0.57, 0.55 for the S&P 500. NASDAQ also 0.59. Gold, silver, and oil all down. Bitcoin kind of flat now. They're just hanging on. Whoa. All right. And our heat map, once again, not bad at all. We got a good amount of green. Look at this, even Canadian Tire. Canadian Tire had a little bump today, which is good. I mean, they need it. Look at this. Retail has been suffering in Canada for a long time. And unfortunately, I think until we get probably, I wasn't even going to say 2. I would say by the time we get about 3 rate cuts in, that's when we might start to see a little bit of improvement with people's spending habits. You know, just an interesting thing there. All right, so that's kind of cool. VFV fell back a little bit. They were almost 1% up earlier. And on the US side, Nvidia, Apple, all looking good. Meta still in the basement. What can we say? And Tesla still having a half decent day. Not too shabby. All right. And then crypto, pretty flat for the most part, other than your bigger, well, not your bigger coins, but big coin on the day. Solana and XRP definitely. Cardano too. Cardano did pretty good, 2.5% up. So not too shabby. Not too shabby. And over on the Discord, by the way, there's today's video. If you have not yet checked that out, it is a deep dive on the EQ Bank. Pretty darn cool. And of course, over here, just to point this out again, here we go. July 26th, we will be on the air at 9:15 a.m. going to 4:15 p.m. So that'll be the 4,000 open to close live stream event. I'm calling it an event. It's 7 hours. That qualifies as an event. So put that on your calendars. Put that on your calendars. It will be fantastic. And we're closer than we look because I have not yet removed all of these. Let's see here. Oh, we've actually done that market close. And we've got that deep dive done. So here we go. Bang. Bang. There we go. Now everything is up to date. Now, here's the thing. Another thing I've been thinking about. Let's go up full screen here. So we have our market close. But with the full show, we're doing an open to close. So I almost think before we get there, I will put up an offer for a bonus market open. A market open, because I'd love to do one of those before we get to the full. So I don't know when yet. Check out this week. Check out this week on Sunday. It might be maybe even Monday. I'm not 100% sure, but I do want to do a market open. So it'd be a nice early one. So we'll have to see. All right. Patricia is in the house. There is a high, another green day. Yes, absolutely. Thigh says, market is green, but BCE TELUS are not going anywhere. Isn't that 7 to 9% dividend attractive enough? It's a nice dividend. It is absolutely. When you have blue chip stocks, so for example, BCE and TELUS, or some of the banks, when they're really far down, you're getting crazy yields. It's the same dividend. And when they do recover, that yield will come down. But any of the stocks that you bought while they were down, you don't lose your yield. You lose it on any new ones you buy. But the ones you bought at that price, you're still getting that great deal. And that is fantastic. So, take advantage of that. Especially if you're not that person who's looking and gearing towards switching into a retirement. So if you're a younger investor, you should be gobbling up some of these. You should just be you should be like Pac-Man, going chomp, 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 when the prices are down. So definitely interesting. Black Dog says, thank you. CC. See, ARK has only sold shares of NVIDIA since Q4 2022, 1.3 million down to 67,000 shares, estimated to have missed out on 1.2 billion for its tech investors. She's pure economic poison. I know. She speaks a big game, but the math has not been on her side for sure. Which is why I say, it's like, oh, I'm actually agreeing with Kathy Wood. Oh dear. That's what I say. Let's see. Did you delete this Sunday stream? I don't believe I did, but now I think we need to take a look. All right, let's pull this up, show you guys some back end here. All right, we're gonna go to YouTube Studio. All right, bang. So you can see right now we're at 39.90. But let's go into content and we'll see if there's any kind of an issue with Sunday's video. All right, live. Ooh, there shows that we're live there. No, it's all up nice and fine. Everything looks good. What I will do is I'm going to grab a shareable link and I'm going to drop it in here so that, if you want to follow that a little bit later, you can go and check it out. There we go. Oh, you mean, all right. I get it. All right. Whoa. Sometimes I can be really wrong about something. And that was one of those situations. Let me just take a look here. No, it's right here. July 14th, 4 p.m. this week. So it's still there. It is still there. Yeah, absolutely. It's very rare that I miss this week. I think there's been a few times. Like every time I have actually missed a stream has been when we had the DeRoche that came through. We lost power for like half a week, and then we lost the internet for about a week. So we lost some streams there. I had a health issue last year, lost a bit there, but for the most part, I hate to miss streams. I hate to do it. So I got to be I have to be sick enough that I can't talk for me to miss a stream. So just something I put out there. All right. Amvas says, let's see, US covered call ETF, Devo has 3-year approximate price PP 6% and TR 23% versus SVOL PP 14% and TR 34%. If SVOL reverses volatility is steady with bullish market, would short-term better to allocate more to? Oh, okay. Well, now you're asking me a question about a whole bunch of ETFs I have never even looked at. But let's look at this Devo. I'm just kind of curious out of that right now. Let's see here. Oh, it is already up. All right. Devo. So what is this? Okay, it is the Amplify CPW Enhanced Dividend Income ETF. Okay. Okay. Let's take a look and see what we got here. Let's look on the 3-year. All right. Well, that's if it's covered call. And what is it? Okay, it doesn't have a huge dividend yield, so it's only a 4% on that. So it's not too. But if you got a lot of movement up, like at least since November here or October, you're probably nicking off a pretty good total return there. But for the most part, it seems to be mostly sideways. Let's take a look here and see what's happening with their dividend. So their dividend does seem to move a fair amount. That makes sense. I mean, it's not bad. It's not bad. It's not, depends on what you're using it for. So I think situationally, right now, where you've got a lot of movement up, that is not too shabby. Now, here's the other question too, is what is their portfolio? All right, let's see here. What are they investing in? They are investing in dividend-paying U.S. exchange-traded equity. So it looks like they've got a big diversification across the board. That's not too shabby. It's not too shabby. I'm just surprised. So are you sure that they actually do covered calls? Well, it says enhanced dividend, so maybe, interesting. Oh yeah, no, they do. They use covered call options. So yeah, they're not making a lot, but I'm actually just surprised that they have such a if they're looking at going into higher dividend yields. I'm kind of surprised that with the covered calls, they're only managing to pull out 4.514%. So that has me kind of a little concerned. But as I said, I haven't really looked at a lot of these other ones, like SVOL. Let's take a quick look. We're here. SVOL. Okay, so that's another simplifying volatility premium ETF. All right, I want to check out this here. All right, now this has this one has a massive yield on it. Let's just look at the last year. It's kind of sideways, so it looks like you're going for the yield mostly. I don't see a lot of movement to the upside on this one. But if you're looking at it for income, it's not too shabby as long as we're in a situation. And we'll look in a second. Let's see here. So, okay, 1/5. So the inverse of the performance. Oh, interesting. So this is kind of like an inverse. Oh, this is really interesting. So one thing I would say, because if it's doing inverse, that means that could be a little bit dicey when it comes to performance. Now, I haven't really, like I said, I this is the first time I've ever seen this ETF, but with a lot of inverse. Like I'll actually show you another one here. Let's just go to HOD because I know a little bit more about this one. So this here is an inverse and leveraged at the same time. It's a bear ETF for oil. So when we look at this one over the last 3 years, at this point, oil was sucking, as you can see where it was at. Let's actually go to 5 years so you can sort of see. So in this situation here, oil crashed. So oil crashed, and oil has been doing better. So you can see what's happened with this inverse. It's been, kind of gunky. Now, if you look at it on a smaller time frame, so let's just say you can still see there's a bit of movements. So, but for the most part, oil has been doing well. And that's kind of that whole thing about an inverse is that I've heard people like I've actually heard people who are like, okay, well, yeah, I invest in oil, but I also invest in the inverse as my hedge. And I'm like, well, why would you do that? Because when oil is doing good, if anything, you don't want to be in something like HOD because it is going down. And if you create a hedge, so in this case here, if you are investing in oil and then you're investing in and your hedge against that is a leveraged inverse, well, potentially, depending on how many you're investing, you could get to a situation where you could cancel yourself out. It's like, or worse, or because it's leveraged, you could actually be doing worse when oil is performing. So you kind of have to sort of take that all into consideration. So for me, anything that's inverse, I look them as being situational. So for example, if something were happening that was crashing the market. So for example, back in the days when Joe Biden came out and said we're going to pretty much empty the U.S. Strategic Oil Reserve to bring the price of oil down. Okay, when that's happening, I'm looking at HOD as something I can get into. I know I'm not going to be in there forever. In fact, this is one of these ones that when I'm trading it, because there's so much of a geopolitical aspect to oil, I'm afraid to even keep it overnight. Like I might get in and play it on a day. So for example, for today, today oil has gone down. If you guys remember, well, let's just take a look right here. Oil down 0.85%. So I would play, whoops, that's the wrong board. Here we go. So this would be a day that you could play this, but I would be just before the market closes, I would be getting out. So if I started the day, let's say I bought it into it in the morning, we'll just say I bought it here. If I bought it here at 6:08, I'm selling it up here at about 6:20, and I'm getting out for the day, because between now and opening on Monday, anything can happen. That could, for example, let's say, for example, something broke out in the Middle East, or even just a small skirmish. It could be enough that it makes people worried about oil supply. And all of a sudden in the after hours, oil may actually do well over the weekend. And yeah, that could be a calamity. That could be a complete calamity for me if I have been holding that over the weekend. So that's why I say situational. All right. So yes. Oh yeah, there we go. We got that done. All right. Everyone's hurting, everything expensive, and the market is nuts. I just don't get it. Holy banana bread. Yeah, I mean, there is a lot of pain. And this is the thing. Going through that pandemic, we kind of knew that the pain that was being created from everything that we had to do, everything from all of the free money that was being spewed out, all of the money printing, a lot of smart people during that process were basically saying that the ramifications of this, the pain that we're going to feel from this, is going to be it's going to be like a decade event. It's not going to be a simple the pandemic's over, everything's back to normal. It's not. It's going to take a while for everything to get back to the way. And even then, some things are never going back. These prices, they're not going down. So the gap that has widened between wages and cost of living, that's here to stay. That's here to stay. So, yeah, I mean, it's not ideal. It's not ideal at all. And what's the solution? Who knows? Some people are in the camp that well, let's just let AI do everything, and and then we'll switch to a UBI system, and everything will be great. Probably not, but it's. I think it's going to be persistent. I think the only constant right now in life is that it's going to be difficult for a while. It definitely will. Let's see. Vic, Monday's going to give you a bigger headache. There you go. Vic says, I'm down in my ARK ETFs. I'm waiting to break even to get out. Ooh, good luck. Good luck. Yeah, I mean, yeah, hopefully something happens to help you out of that. But yeah, I've never invested in any of the ARK ETFs. Problem is when Kathy comes off with her ideas, sometimes she kind of reminds me of one of them people that has to be right all the time. And that's, it's hard to take somebody like that 100% serious. And so far, the math has not been in her favor. So Let's see. The only thing worse than ARK is Emerge ETFs. What a scam. Just Google it. Yeah. Emerge is another group that, it's like, how they say the proof is in the pudding. These guys are on pudding-free diets. What can I say? All right. Curious about your thoughts on DRX. All right. Let's bring up. Whoops. Let's first of all bring up the screen. All right. DRX, the Dirax group or ADF group. Now I have invested in these guys in the challenge, because even though they've been struggling pretty much since I've invested in them, but I'm still actually liking what I've seen. So when we look at their 3-year, they've done well. They have done well. Now we're in another one, we're in a correction, very much like they've had them before. They're having them again. I still feel pretty strong about this. Now, this here is a company out of England, and they just happen to have a presence on the TSX, but I do like them. And as you can see, what they do is a lot of engineering. So connections, fabrications, industrial coatings, steel structures. These are things that are going to be in high demand. As more focus goes on infrastructure, building, I like what they do. I think they're a very safe bet. But this is 100% normal. This drop here, not concerned about it. If anything, it's a good opportunity to get more, to average down whatever, depending on where your position was when you entered. Where was it when I entered? I'm kind of curious now. Let me just take a look here. I entered at $16.01. So where was that at? 16.1. So right about here-ish. I probably entered about here, or it was pretty recent. So it was probably about here, and then it's gone down. So what can I say? Okay. There we go. I'm going to move that out of the way. There we go. But I am still really bullish on Drax. Definitely bullish for sure. Vic says CC says, Vic, there's only 2 days to sell ARK investments, today or yesterday. Vic says, my new old thing is to DCA into S&P 500 and just leave it. Hard to buy at highs, but started this. That makes sense. I mean, that does make sense. Let's see. Al says, I wish I started investing during the pandemic. Yeah. I mean, that giant crash on March 20th of 2020. Sorry, not March 20th, but March 2020. Oh boy, there were deals abound. Deals abound. I would have loved to have had a ton of cash to invest that day. Let's see. Were you around in the 1920s? No, I have a feeling that I think I know where you're going. But I think you're heading towards that depression talk. I don't see that happening, but the only reason I think I don't see it is that no government today, today's day and age, wants to be the government that leads their country into a depression. So they'll do anything they can to not have it happen on their watch. So kind of like if you think about the U.S. debt. No administration wants to do what it needs to just get that debt under control. They just keep on raising ceilings and kicking the can further down. This is the next administration's problem. I will raise the debt ceilings. I will print money. I will do whatever it takes to not have to deal with it. And I think that will be the same way with most countries. Most countries do not want, I should probably go big screen. Most countries do not want to, to have to even deal with it. So I don't think unless we have some kind of a massive black swan event, I don't see a depression happening. But there can be massive events. We all know that. We've been through a pandemic. That was a massive event. So what can I say? All right. Al says, I never heard of ARK or Kathy before. Oh, your ears were blessed until now. Now you know. All right. Bill says, my Allied Properties portfolio is on the move. Let's take a look. Let's take a look. AP. Here we go. And it's interesting. We actually just did a deep dive on these guys not that long ago. But, oh, look at this. Got some nice movement in the last 5 days. Let's just do 3 months for now. So there is some movement on the Allied Properties. Not too shabby. Not too shabby. Let's hope they can keep this up. Now, if we do get a rate cut in June, or so June, we're already done that. We already got that one. July. That could definitely be good for these guys. Now, I know I've said in the past, I hope that we don't get one in July. But I think it'll really come down to, we have one CPI next week. That CPI could really make the difference. I think if inflation is going down on the CPI, we could actually see another rate cut. But if it's flat, or worse, then I don't think we'll see one. But even though I think we should wait, there's that possibility. There's still that possibility. What can I say? Amvas says, overall CAD CC ETF, ENCC top ETF with no price erosion. Yeah, ENCC is fantastic. Let me show you guys. I mean, I love ENCC. All right. It's a global call one. And we'll just look at the 3-year here. So you can see with this one here, we had a massive rise up after the pandemic. That's fantastic. Since then, they've been moving mostly, it's been mostly flat. But here's the thing. Their dividend has been safe. They've been pulling off a good 14.054%. And when oil eventually explodes again, and it will, eventually we'll get back to like $100 a barrel. This is going to look good. This is going to actually come up pretty good. So I do like these. And when we look at it as a shorter term, if you look at it just the 1 year, you can see just in here, there is a lot of variation. So, this was that recent climb in the price of oil, and that oil's been coming down a little bit. So has this one, but it is, it's not a bad ETF. It is one of my favorites. I do like that for a covered call ETF. All right. Prairie says, have to head out, picking up my daughter from work. Hope everyone has a great weekend and see you all Sunday afternoon. Absolutely. Let's see. Last time I mentioned PSA was good. It has been up 5% over the last 2 days. Yeah, well, PSA is predictable, right? And we'll pull this up here again for you guys. It's one of those cash ETFs. And let's take a gander here. So you can sort of see it is very predictable. So yeah, it's jumped up to 11 from 9. So yeah, that looks pretty good. But it's going to come back down, right? Because let's look at the last 6 months. This is what it does. Up, bang, up, down. And that's its function. That's its structure. Because it's preserving price. So basically, that's fine. So, during this point, think of it this way. It's almost like it's powering up its dividend payment. And then bang, here you go. Here's your dividends. And it does it over again. So yeah, dividend, bang, bang. And that's cool. That's cool. Oh, never mind. You're talking about PSA in the United States. All right. Well, let's take a look at that then. All right. Because I was like, why is somebody getting excited over a cash ETF? All right. Public storage. Yeah. Let's take a look here. Let's look at the last year. We do see a nice little bump up here. So why? I am thinking maybe they had an earnings call. Let's take a look. All right. We got to add them because I don't have them on here. PSA, public storage. Let's drop it in. All right. Let's go down. PSA. No, we did not have an earnings call. Oh, that's interesting. That's interesting. Well, according to this, apparently real estate stocks had a bit of a jump after the inflation report. Let's take a look. This is from the Wall Street Journal. So let's see. Real estate stocks are finally having their day in the sun. Nice. Let's see. The worst performing S&P 500 sector this year took a turn as the index leader. Yeah, so let's see. The group was recently up nearly 3%. The rally is likely because investors are now thinking the Federal Reserve may cut interest rates sooner than later, a shift that has pushed bond yields lower on Thursday. That does make sense. That does make sense. So we're in that situation where I hope nobody's reading this. I'm gonna bring it back to. Okay, I figured it out. Okay, so I tried to remove my extra screen. I accidentally removed me. I didn't realize I had removed me. So, oh my gosh, like how long ago? I hope I didn't do that very long ago, but no, that was me. That was me. I accidentally put me in the waiting room. I didn't realize I was in the waiting room. Oh my God, that's embarrassing. I don't think I've ever done that one before, but yeah. We're everything is fine now. Everything is fine now. Okay. Our chats are showing up. Yes, I was, and no, it was not the cleaner. It was me. It was me. It was me 100%. Yep. Holy cow. All right. Two movies Sunday, horror and rom-com. Watch the horror first or last. Um, oh God. I would probably say watch it last because that way there, if the rom-com turns out to be really bad, um, it's like warming you up for a horror show. Just I don't know. It's I would probably rom-com then horror maybe. That's just how I would do it. So just something to keep in mind. All right, guys, we are getting towards the end. If you have last minute questions, drop them in. I'm going to have a sip on the old coffee while you guys do that. Oh, I remember there was something I wanted to mention. So in the last live stream, we were talking about Enid's languages and She had brought up about Adrian, Canadian in a t-shirt or banana bread in a t-shirt, being from Romania. So I was like, oh yeah, that's cool. And I thought that was pretty darn cool. Well, there was actually a comment on the video from Adrian. He actually came in and confirmed that he was from Romania. So I thought that was just funny. It was kind of one of those things. I did let him know that we refer to him over here as banana bread in a t-shirt. So he is now in on that. Just so you guys know. I think actually nine went over and mentioned and called him a banana bread in a t-shirt over on his channel. So poor Adrian. But at the same time, oh well. Let's see. Mario says never watch a horror movie before bed. I don't know. Actually, so years ago I wrote a book. It's a horror book, and one person reached out to me who read it. Actually, his daughter read it, and he reached out to me and said, "Thank you very much for giving my daughter nightmares." That was his response. I was like, sorry. But at the same time, I'm like, well, it was a horror book, so it's kind of designed to do that. So mission accomplished. Mission accomplished. That's the way I put it. CC, both rated well. Okay, both movies then. Okay, well, that's even still. It really depends. If you are a person who is prone to nightmares, then maybe do the horror first, and then the. I'm the type that I don't mind nightmares. They're at least kind of interesting, so I just put it that way. All right, Kevin Cass says always enjoy these educational sessions. Thank you. Absolutely. Mario says only Cat in the Hat before bed for the kids. Yeah, exactly. I look at it this way. If you let your kid buy a horror book, and the fact that the cover of the book has a horribly burned man on the front of it, I'm like, seriously, do you think this is a good idea if your kid is prone to nightmares for them to be reading? Probably not. So we'll just leave it at that. Cece says, haha, Mario. There we go. All right, everybody. We threw another one of these market close. And oh dear. I'm about to say goodbye. And here we go. We got ourselves a super sticker, $6.99 from the Kevin Cass. Thank you very much. Thank you very, very much. Always appreciated. So back to I'll go back into my closure amount here. My closure amount. my closure speech. Anyway, it has been fantastic. I hope you guys have a really good weekend. I will be here, of course, on Sunday. I've already got the news prepared and the pictures all done and all of that fun stuff. So I'm looking forward to it. Last Sunday, by the way, absolutely rocked. Like I think we went close to 3 hours. It was absolutely a blast. So bring that energy this Sunday, and we'll have a good time for sure. Anyway, you guys rock. Have a great weekend. We'll see you soon. Take care, everybody.